Okay, so you want to own a towing company. Flatbed trucks out on calls, phones ringing with breakdowns and accidents, insurance companies sending you business, police rotation contracts, $150 to $400 per tow, running 24/7. You own the trucks, hire the drivers, and collect revenue every time someone needs a vehicle moved. Sounds like the perfect essential service business. And honestly, from the outside, it really does look that way. But here is what people who actually own successful towing operations know, and what most people looking at this industry never tell you. A towing company is not a truck rental business that happens to move cars. It is a highly regulated, insurance-intensive, capital-heavy emergency service operation competing for access to police rotation lists controlled by politics and relationships, where your liability exposure can bankrupt you from a single accident, where fuel costs swing 40% in 6 months, where finding and keeping qualified drivers is harder than finding customers, and where the difference between a $300,000 per year profitable operation and a $500,000 money-losing operation is whether you can get on the city's rotation list or you are stuck chasing private property tows at 2 a.m. for $75 each. The revenue potential is real. The barriers are real, in ways that most people never see coming. Let's start at the beginning. When people say towing company, they are usually picturing one thing: light-duty tow trucks, flatbeds and wheel lifts, responding to breakdowns, accidents, lockouts, and impounds. A truck shows up, loads a disabled vehicle, transports it to a repair shop or impound lot, and charges $100 to $300 depending on distance and circumstances. That is the light-duty towing segment, and it represents roughly 75% to 80% of the towing industry by number of operators. But the industry actually has 3 distinct segments with completely different economics. Light-duty towing handles passenger vehicles and light trucks under 10,000 pounds. These are your everyday cars, SUVs, motorcycles. The equipment is less expensive, the barriers to entry are lower, and the competition is fierce. Medium-duty towing handles larger vehicles, box trucks, RVs, small buses, vehicles from 10,000 to 26,000 pounds. The equipment costs more, the calls are less frequent but higher paying, and you need specialized training and equipment. Heavy-duty towing handles commercial trucks, tractor-trailers, buses, construction equipment, anything over 26,000 pounds. The equipment costs $250,000 to $500,000 plus per truck. The jobs pay $1,000 to $10,000 plus per call. The competition is minimal because the barriers are so high, but you need substantial capital, specialized certifications, and relationships with trucking companies and commercial fleets. Most people entering the industry start with light duty because the capital requirement is lowest. That is also where the competition is most intense and the margins are thinnest. Here is something that surprises people when they first look at this industry. The United States has approximately 35,000 to 45,000 towing companies operating nationwide. The industry generates roughly $8 to $10 billion in annual revenue. But the market is deeply fragmented. The largest operators, Geico's towing network, Agero, Urgently, are dispatch platforms that contract with independent towers. The next tier is regional operators running 20 to 100 plus trucks. The vast majority are small independents running 1 to 5 trucks. And the industry is under constant regulatory pressure. Cities pass ordinances capping towing fees, restricting private property towing, requiring rotation list participation, and imposing consumer protection rules. Texas, Florida, California, and Illinois have passed laws in recent years limiting what towers can charge, how long they can hold vehicles, and what fees they can assess. You are entering a necessary industry that lawmakers and the public often view as predatory. Before you spend a single dollar, you need to decide what kind of towing operation you are building. Are you pursuing police rotation contracts where the city or county dispatches you to accident scenes and abandoned vehicles? Are you focusing on motor club contracts with AAA, insurance companies, and roadside assistance programs? Are you doing private property impounds for apartment complexes and shopping centers? Or are you running a consumer-facing business relying on direct calls from stranded motorists? Each model has completely different revenue, costs, and competitive dynamics. The most lucrative is police rotation. When you are on the rotation list, the police dispatch calls to you in sequence with other approved operators. Accident tows, DUI impounds, abandoned vehicles. These jobs pay $150 to $400 plus per tow depending on the jurisdiction and distance. You get a steady stream of work, you get paid by insurance companies or vehicle owners, and the police referral adds legitimacy. But getting on the rotation list is nearly impossible in established markets. Most cities cap the number of operators on the list at 5 to 15 companies. The list only opens when someone retires, dies, or loses their contract due to violations. And selection is not purely merit-based. It is relationships, politics, tenure, and sometimes favoritism. In some jurisdictions, you have to operate in the area for 3 to 5 years before you are even eligible to apply. In others, the same companies have been on the rotation for 20-plus years and will not be displaced. Motor club contracts, AAA, and insurance roadside assistance provide volume but lower margins. AAA pays $50 to $90 per service call, depending on the service type and location. Lockouts, jump starts, tire changes, and tows under 5 miles. You get high call volume, reliable payment, but thin profit per call. And AAA controls the customer relationship. You are a subcontractor, not a brand. Private property impounds are higher margin but reputationally damaging and legally risky. You contract with apartment complexes, shopping centers, and private lots to remove unauthorized vehicles. You tow the car to your impound lot, and the owner pays $150 to $400 plus to retrieve it. Revenue is immediate, but regulations are strict. Many states require posted signage with specific language, minimum time before towing, and caps on fees. Violate the rules and you face lawsuits, fines, and license revocation. Consumer direct calls. Someone's car breaks down and they Google, "tow truck near me," are unpredictable. You might get 0 calls on a Tuesday afternoon and 12 calls during a Saturday snowstorm. Pricing is higher, $125 to $350 per tow. But volume is inconsistent. Most successful operators diversify across all 4 revenue streams. Police rotation for steady baseload, motor clubs for volume, private property for high-margin work, and consumer direct for premium pricing. Now let's talk about what it actually costs to start a towing company. You need a truck. A used light-duty flatbed tow truck in decent condition, 2010 to 2018 model year, 80,000 to 150,000 miles, costs $35,000 to $75,000. A newer truck, 2020 to 2023, with under 50,000 miles, costs $80,000 to $140,000. A wheel lift tow truck, less versatile but cheaper, runs $25,000 to $60,000 used, $60,000 to $100,000 new. If you are starting with one truck to test the business, budget $50,000 to $70,000 for a reliable used flatbed. You need equipment and tools. Dollies for towing all-wheel drive vehicles, $800 to $1,500. Straps, chains, and rigging, $1,000 to $2,500. Wheel chocks, cribbing, safety equipment, $500 to $1,200. Jump starter, air compressor, lockout tools, $800 to $1,500. Traffic cones, safety vests, hazard lights, $400 to $800. GPS and dispatch software, $500 to $2,000 for hardware and setup. Total equipment and tools, $4,000 to $9,500. You need insurance. And this is where most people experience sticker shock. Commercial auto insurance for a tow truck is not like insuring a personal vehicle. You are operating a commercial vehicle carrying other people's property, often worth $20,000 to $60,000, on public roads in emergency conditions. Insurance carriers price this risk accordingly. Annual commercial auto insurance for one tow truck, $8,000 to $18,000 depending on driver age, driving record, coverage limits, and location. In high-cost states like California, Michigan, or Florida, $12,000 to $25,000 plus per truck annually. You also need garage keeper's liability insurance, covering damage to vehicles in your care, custody, and control. If you damage a customer's $45,000 SUV while loading it, this policy covers the claim. Annual premium, $3,000 to $8,000 depending on coverage limits. You need general liability insurance, $1,500 to $4,000 annually. If you have an impound lot, you need on-hook and off-hook coverage, protecting vehicles from theft or damage while stored. Another $2,500 to $6,000 annually. Total insurance for a one-truck operation, $15,000 to $36,000 annually. For a two-truck operation, $25,000 to $55,000. This is the cost that kills undercapitalized startups. You thought insurance would be $5,000 per year. It is actually $18,000. You do not have the cash flow. You go uninsured or underinsured, and one accident bankrupts you. You need licensing and permits. Requirements vary by state. Most states require a tow truck operator license or motor carrier permit, $200 to $1,500 annually. Some states require a tow truck driver certification for every driver, $100 to $500 per driver. You need a commercial driver's license, CDL, if your truck exceeds 26,000 pounds GVWR. Most light-duty trucks do not require CDL, but medium and heavy-duty do. Some cities require a business license specifically for towing, $100 to $1,000 annually. If you operate an impound lot, you need additional permits, vehicle storage facility licenses, $500 to $3,000 annually depending on jurisdiction. Total licensing and permits, $800 to $5,000 to get started, $500 to $2,500 annually to maintain. You need an impound lot if you are doing police rotation or private property work. When you tow a vehicle, you have to store it somewhere secure. You cannot park impounded cars on the street or in a random lot. Impound lots must meet specific requirements. Fenced and secured with locks, minimum 6-foot chain link, often 8-foot with barbed wire. Lighting for 24-hour access. Office or booth for releasing vehicles. Paved or gravel surface dirt lots often do not meet code. Video surveillance in some jurisdictions. You can lease impound lot space, $1,500 to $6,000 per month depending on size and location, or buy land and develop it, $100,000 to $300,000 plus depending on size and market. Most startups lease space or partner with an existing lot and pay per vehicle storage fees, $10 to $30 per day per vehicle, keeping the customer's storage fees and paying a portion to the lot owner. You need dispatch and payment systems. If you are running a consumer-facing business, you need a phone line that answers 24/7, either you answering personally or an answering service, $100 to $400 per month. You need dispatch software to track jobs, routes, and billing, $50 to $300 per month. You need a credit card processing system because 70% plus of customers pay by card, processing fees of 2.5% to 3.5% per transaction. You need marketing. A website with local SEO, $1,500 to $5,000 to build, $100 to $500 per month to maintain and optimize. Google Ads for tow truck near me, searches, highly competitive, $3 to $15 per click, $500 to $3,000 per month depending on market. Vehicle wraps with your company name and phone number, $2,500 to $6,000 per truck. Local listings, directories, and sponsorships, $500 to $2,000 annually. Pre-launch marketing and branding, $5,000 to $12,000. Let's add up the startup costs for a one-truck operation. Truck, $60,000 equipment and tools, $6,500 insurance, first year, $18,000 licensing and permits, $2,000 impound lot deposit or setup, $5,000 dispatch and systems, $2,500 marketing and branding, $8,000 working capital for first 3 months, $15,000 total startup capital, $117,000 to $150,000. Most operators finance the truck, putting down 10% to 20%, $6,000 to $12,000, and financing $48,000 to $54,000 at 7% to 12% interest over 5 to 7 years. Monthly truck payment, $900 to $1,200. Even with financing, you need $60,000 to $100,000 in cash to launch properly. Now let's talk about revenue. How much does a tow truck actually make? This is where the numbers vary wildly based on your revenue mix and market. A police rotation tow averages $200 to $350 per call, including tow fee and any storage fees. A motor club AAA call pays $60 to $90. A private property impound generates $200 to $500 in tow and storage fees. A consumer direct call, $150 to $400 depending on distance and services. A single truck, operated efficiently with good revenue mix, can generate 4 to 8 billable jobs per day depending on market density and operator hustle. Let's say 5 jobs per day, 6 days per week, 26 days per month, 130 jobs per month. Revenue mix, 30% police rotation, 40% motor clubs, 20% private property, 10% direct consumer. 39 police rotation jobs at $275 average, $10,725. 52 motor club jobs at $75 average, $3,900. 26 private property jobs at $350 average, $9,100. 13 consumer direct jobs at $200 average, $2,600. Total monthly revenue, $26,325. Annual revenue, $315,900. That looks strong. But now let's talk about costs. Fuel. A tow truck gets 8 to 12 miles per gallon depending on vehicle size and load. You are driving 100 to 200 miles per day. Service calls. Deadhead miles returning to base or traveling to next job. At 150 miles per day, 6 days per week, 3,900 miles per month. At 10 miles per gallon and $3.75 per gallon, monthly fuel cost is $1,462.50. Annually, $17,550. But diesel prices fluctuate. In 2022, diesel hit $5.50 to $6 per gallon in many states. Your monthly fuel cost jumped to $2,145, an increase of $682 per month, $8,184 annually. You cannot raise prices fast enough to offset it. Your margin evaporates. Driver wages. If you are the owner-operator driving the truck yourself, you are paying yourself through profit. If you hire a driver, you are paying $18 to $28 per hour depending on experience and market. Tow truck drivers work long shifts, often 10 to 12 hours, and you need 24/7 coverage. To cover 24/7 with 2 drivers working 12-hour shifts, you need 2.5 to 3 FTEs accounting for days off. At $22 per hour, 40 hours per week per driver, plus overtime, annual labor cost is $120,000 to $160,000 for round-the-clock coverage with 2 drivers. Most small operators start owner-operated, working 60 to 80 hours per week themselves to avoid this cost. Truck payment, $900 to $1,200 per month, $10,800 to $14,400 annually. Insurance, $18,000 annually for 1 truck. Maintenance and repairs. Tow trucks work hard. Hydraulics, winches, flatbed mechanisms, and heavy loads create constant wear. Oil changes every 5,000 miles, $150 to $300 each. Tires every 40,000 to 60,000 miles, $1,200 to $2,500 per set. Brake jobs, transmission service, hydraulic system maintenance, electrical repairs. Industry standard, budget 8% to 12% of revenue for maintenance and repairs. At $315,900 revenue, that is $25,272 to $37,908 annually. Let's call it $30,000. Impound lot costs. If you lease space, $2,500 per month, $30,000 annually. If you pay per vehicle storage to a partner lot and keep the difference, your net might be $15,000 to $25,000 annually in lot-related profit or cost depending on volume. Licensing and permits, annual renewals $1,200. Dispatch and software $150 per month, $1,800 annually. Credit card processing fees at 3% of 70% card-based revenue, $6,635 annually. Marketing and advertising, $12,000 to $24,000 annually to maintain visibility and generate consumer direct calls. Office and administrative costs, phone, internet, accounting, $3,000 to $6,000 annually. Miscellaneous, uniforms, office supplies, minor tools, $2,500 annually. Let's add it up at $315,900 annual revenue, owner-operated, no driver wages. Fuel, $17,550 truck payment, $12,000 insurance, $18,000 maintenance, $30,000 impound lot, $24,000 licensing, $1,200 software, $1,800 processing fees, $6,635 marketing, $18,000 office/admin, $4,500 miscellaneous, $2,500 total operating expenses, $136,185. Net operating income before owner compensation, $179,715. You are working 60 to 70 hours per week, 3,120 to 3,640 hours annually. At $179,715 profit, you are earning $49 to $58 per hour for your time. That is a solid income for owner-operated skilled labor. But that assumes 130 jobs per month consistently, a balanced revenue mix, and no major equipment failures. Now let's talk about what kills towing companies. Driver shortages and turnover. Tow truck driving is hard work. Irregular hours, night shifts, weekends, holidays. You are out in all weather. You deal with stressed, angry customers whose cars just broke down or got impounded. The work is physical, hooking chains, operating hydraulics, securing vehicles. Driver turnover in the towing industry runs 40% to 80% annually. You hire a driver, train them for 2 months, they work for 6 months, then quit for a job with better hours. You are constantly recruiting and training. And finding qualified drivers is increasingly difficult. They need clean driving records. Most insurance companies require no more than 2 violations in 3 years. They need to pass drug tests. They need physical capability. They need customer service skills. When you cannot find drivers, you are stuck driving the truck yourself, working 70 to 90 hours per week, burning out. Insurance cost spirals. Your first year, insurance is $18,000. You have one at-fault accident where your driver damages a customer's vehicle. The claim is $12,000. Your insurance pays it, but it goes on your loss history. Year 2, your premium jumps to $24,000. Year 3, another incident, and your premium hits $32,000. That $14,000 annual increase just erased most of your profit. Some operators become uninsurable. After multiple claims, carriers refuse to renew. You search for coverage. Only high-risk carriers will cover you at $45,000 to $60,000 per truck. You cannot afford it. You operate uninsured, which is illegal and suicidal. One accident and you lose everything. Equipment failures. Your truck's transmission fails. Rebuild cost, $6,500. Downtime, 2 weeks. You lose 2 weeks of revenue, $12,000 to $14,000, plus the repair cost. Total impact, $18,500 to $20,500. That is your profit for 3 months gone. Or your hydraulic system fails during a job. You cannot complete the tow. You have to call a competitor to finish. You lose the revenue, damage your reputation, and pay $3,800 to repair the hydraulics. Regulatory crackdowns. Your city passes an ordinance capping private property tow fees at $150, down from $275. You just lost $125 per private property tow. At 26 tows per month, that is $3,250 per month, $39,000 annually. Your business model breaks. Or the city removes you from the police rotation list due to customer complaints, some legitimate, some not. You lose 30% of your revenue overnight. You cannot replace it. You downsize or close. Litigation. A customer claims you damaged their vehicle during a tow. They sue for $18,000. Your insurance covers it, but your rates increase. Or a customer claims you illegally towed their car from a private lot. Signage was not compliant. They sue. You spend $8,000 in legal fees defending yourself even though you win. In states like California and Florida, consumer protection laws allow customers to sue towing companies for statutory damages of $500 to $2,500 per violation plus attorney fees. Predatory attorneys target towing companies with minor technical violations, sign placement 6 inches off, missing language on the sign, and file lawsuits demanding settlements. You settle for $3,500 to avoid $15,000 in legal fees. You get hit with 3 of these in 1 year. You are out $10,500 in settlements and legal costs. Bad debt. Insurance companies are slow to pay. You tow a vehicle from an accident scene in January. The insurance company takes 60 to 90 days to process and pay. You are carrying $8,000 to $15,000 in receivables at any given time. Some claims get denied. You eat the loss. Or a customer retrieves their impounded vehicle and disputes the charges with their credit card company. The chargeback costs you the tow fee plus a $25 chargeback fee. You lose $225 on a $200 tow. Competition. An established operator with 12 trucks undercuts your pricing to squeeze you out. They can afford to run certain jobs at break-even because they have volume. You cannot. You lose market share. Or a well-funded new entrant launches with aggressive marketing, newer trucks, and better driver pay. They poach your drivers. They dominate Google Ads. They take your consumer direct calls. Let's talk about the operators who build sustainable, profitable towing businesses. They get on police rotation lists, whatever it takes. They build relationships with police departments, city officials, and county procurement. They attend community events, sponsor little league teams, and make themselves visible and trusted. When a rotation spot opens, they are first in line. They diversify revenue but focus on high-margin work. They do not chase low-margin motor club calls exclusively. They balance volume work with higher-paying police rotation and private property jobs. They run tight operations. They track every metric: cost per mile, revenue per job, profit per truck, jobs per day. They optimize routes using GPS and dispatch software. They minimize deadhead miles. They maintain equipment religiously. Preventive maintenance schedules, oil changes on time, inspections after every shift. They fix small problems before they become expensive failures. They hire carefully and retain drivers. They pay $2 to $4 above market rate. They offer benefits, health insurance, paid time off. They treat drivers with respect. Turnover drops from 60% to 20%. Productivity and customer satisfaction increase. They scale methodically. They run 1 truck profitably for 2 years, then add a second truck. They do not overextend with debt. They grow from cash flow. And they build reputation. In the towing business, reputation is everything. Honest pricing, professional service, fast response times, clean trucks, courteous drivers. Word spreads. Referrals increase. Google reviews hit 4.5+ stars. Direct call volume grows. Let's run the numbers 2 ways. Best case scenario. You launch in a mid-sized city. You grind for 18 months building relationships. You get on the police rotation list in year 2. You run 2 trucks, 1 owner-operated, 1 with a hired driver. You focus on police rotation and private property tows. Truck 1, owner-operated, 140 jobs/month. Average $240 per job, $33,600 per month. Truck 2, driver-operated, 110 jobs/month. Average $210 per job, $23,100 per month. Total monthly revenue, $56,700. Annual revenue, $680,400. Operating expenses. Fuel, $38,000 driver wages, 1 driver, $65,000 truck payments, 2 trucks, $24,000 insurance, 2 trucks, $38,000 maintenance, $68,000 impound lot, $36,000 licensing, $2,400 software, $3,600 processing fees, $14,300 marketing, $20,000 office/admin, $8,000 miscellaneous, $6,000 total expenses, $323,300. Net operating income before owner compensation, $357,100. You pay yourself $110,000 as owner-operator. Remaining profit, $247,100. You have built a serious business. After paying off truck loans in year 5, profit increases to $270,000 plus. You add a 3rd truck. By year 7, you are running 4 trucks, generating $900,000 plus in revenue and netting $320,000 to $380,000 annually. Realistic scenario. You launch in a saturated market. You cannot get on police rotation. You are stuck with motor club calls, low-margin private property tows, and sporadic consumer direct calls. You run 1 truck, owner-operated. Monthly jobs, 95. Average revenue per job, $110. Heavy motor club mix. Monthly revenue, $10,450. Annual revenue, $125,400. Operating expenses. Fuel, $15,000 truck payment, $12,000 insurance, $20,000 maintenance, $18,000 impound lot, $12,000 licensing, $1,200 software, $1,800 processing fees, $2,600 marketing, $8,000 office/admin, $4,000 miscellaneous, $2,500 total expenses, $97,100. Net operating income, $28,300. You are working 65 hours per week, 3,380 hours annually, earning $8.37 per hour before taxes. By year 2, you are exhausted. Insurance increased to $23,000 after a minor claim. Fuel spiked to $18,500. Your net income dropped to $22,800. You are making poverty wages while working brutal hours and carrying massive liability. You try to sell the business. No buyers. You sell the truck for $42,000, pay off the remaining $38,000 loan, and walk away with $4,000 after 2 years. The difference between those outcomes is access to police rotation, revenue mix, market selection, and relentless execution. The towing industry generates $8 to $10 billion annually. There are operators running 50-plus truck fleets generating $8 to $15 million in annual revenue. There are family businesses that have operated profitably for 30-plus years, passing down rotation list access across generations. But the median towing company operates 1 to 3 trucks, generates $180,000 to $450,000 in revenue, and nets $35,000 to $90,000 in owner compensation while working 60 to 80-hour weeks. The people who succeed understand this is a relationship business, a logistics business, and a risk management business disguised as driving trucks. They build political and community relationships to access rotation lists. They manage insurance costs aggressively. They retain drivers. They diversify revenue intelligently. The people who fail believe owning a tow truck means automatic income. They underestimate insurance costs by 60%. They cannot get on rotation lists and get stuck with low-margin work. They do not maintain equipment and suffer catastrophic failures. They operate uninsured or underinsured, and one accident destroys them. The truck hooks the car and transports it automatically once you operate the controls. But it does not run the business.